So, an interesting week in the news doesn't necessarily mean an interesting week in the markets, and we'll go through why that is in just a second here when we go through some charts. But if you're new here, welcome. What we do every Friday is we go through stock markets, Forex, crypto, try to figure out what happened this week, potentially what could happen next week. And then, as I always do when I'm done this video, I run and I record the video for members where we have about 30 some odd symbols from our algorithms that all those members are going to get to see live in real time. Our Discord room will alert them. There's 25 years of backtested data for each and every algorithm, so we know we're trading with an edge that we can test and prove, and not just a chart looks good kind of thing. So if you're interested in that, make sure you go to StatsEdgeTrading.com. You can take a look at all the different algorithms there. And if that's something you end up liking, as always, right, make sure that you check in there and give us a try. So without further ado, let's just pop right into it. So I did a tweet that popped off a little bit controversial with some people, where I basically just said this is the weekly candle that they're trying to get you to panic about. And I know there's a lot of stuff going on there geopolitically. You guys know me. If you know me at all, you know I know very little about it. I'll follow very little about it. I'm intentionally tuned out to a lot of the news that exists out there. And for this reason, I saw a lot of traders I know and respect really panicking. And then I was looking at the price action on Friday during this period of time, and not a lot happened, right? This day, whatever happened on this day, was way more impactful to the market than whatever happened on this day. Right? It's a bigger gap. It's a wider body candle. Back here was another one. There was a lot of days in recent past that are way more volatile and way more active than this. So whatever this is was mostly priced into the market. Right? Something we can certainly not ignore entirely, but the market doesn't seem to care, right? And if the market doesn't seem to care that much, why would I as a trader, right? For personal reasons and all of that, for sure. But we're just strictly talking about trading and investing. And being down 1% on the SPY, down 1.5% on the Qs, or 1.25% on the Qs, that's not a lot. It's not nothing, but it's certainly not a lot. So that was one of the main things I just wanted to look at off the bat here, right? IWM, which is the small caps, which quite often does the absolute worst of everything, is still holding its breakout. And this is the area that I think we need to look at. So if we go back to the SPY, you can see this breakout area right here, kind of 595.5, right? We broke that. We've come back to it. We haven't moved anywhere. We're basically at where we were last Friday. So that's why that weekly candle pretty much goes nowhere. And then if we go down to IWM, although it gets hit a little bit worse because the poor IWM has been underperforming the market for like 5 years now, but it's still holding its breakout. So what we want to see is maybe a couple days of action to get through this news and to get through this event. And if we hold that breakout level, then great. If not, we start looking at the low end of these ranges. So for the IWM, it'd be down here. If we take a look at the Qs, right, it would be down here at 505. If we look at the SPY, it would be down here at 575. We look to see if we can hold these zones fairly well. Now, one thing that was interesting is ARK, which is Cathie Wood's. Again, if you don't know ARK, essentially think of the anti-Warren Buffett. As opposed to making money, generally speaking, you lose money, and they invest in companies that are very speculative in nature. They don't have any money or any prospects right now, but their goal is that they will in the future. That closed green on Friday. So if it was a huge kind of world-ending event, would the most speculative stocks in the world actually go green? You can see a lot of these other ETFs that are green as well. A lot of these make sense, whether it's oil and gold and a lot of this, but solar with a great day closing green. So some of these names that you wouldn't expect, agriculture doing very well. But yes, ARK closing green was definitely a standout to say, hey, this is something that is, again, not something I would expect based off the news events that happened. If the news events that happened were big and impactful in the way that people thought. Another sector, I guess, thematic ETF that stood out to me in my scans was PSIL. So this is the Psychedelics ETF. You can see A, not reacting with the news, and B, nice little massive gains here, actually, about 50% just on the sector itself, and then a nice consolidation against those gains and not really reacting to the news out there. So it looks like maybe something in the psychedelic sectors could be brewing, and you can see how when these things move, you get a great percentage gain out of them. ITA makes perfect sense as something to keep in watch. This is the aerospace and defense. Full disclosure, I'm long some from way back here. Just the all-time high breakout was very clean. So I bought some of that all-time high breakout, and that's been a good trade so far, but just want to let everyone know. I like the look of the chart here, but I just always want to caveat that when I'm in something. UFO. So UFO is a thematic ETF. It's just all about space. All the different space names are in here. And this is looking really interesting as well. It had this nice kind of cup, and now it's starting to develop this handle look. So above these highs at kind of 26.5 could be an interesting place to look at this. Again, you can either trade the ETF, or if you have a favorite space stock. I know some of these are already going crazy, like ASTS was a wild day, RKLB. Right, this one's not participating as much, so you could go through this list. What is it? There's PL, there's Dark Sky, there's a whole bunch of these names. And you can see a lot of these are consolidating at highs, which would make sense why the ETF is consolidating at highs. So that's something I'm going to watch going into next week. The dollar rebounded quite a bit on Friday based off all the news and everything. Massive overall downtrend though. Dollar being down 10, 11% in this kind of straight line is uncharacteristic. But we have these prior lows here. We sold under those lows, and then when the event started, people started to buy the dollar. However, if the markets are going to gap higher to show that it's kind of all clear, then you're probably going to see the dollar break this 98 zone. So we need to keep an eye on that very, very closely. Gold, XAU, USD, be a good way to do it. Gold chart looks almost too nice that it has me a little bit worried, right? If we just take this and then we take this trend line here, we have a very nice kind of ascending triangle here with 1, 2, 3 taps. So if we get through there, maybe gold will continue again. But if we're thinking that potentially the market has priced in this event and that the reaction wasn't that bad, quite often there's rarely delayed reactions in the market. Usually they happen pretty much right on time. If the market is going to revert from there, then maybe gold is going to fail this breakout, and it might finally be time to take a little bit of a short or some profits on this if you're long. However, if things get worse, if the market continues to sell off, this breakout could stick, as this is the only flight to safety that I'm seeing out there. Because if you like a Bitcoin, although holding on okay right now and actually did close green a little bit yesterday, it hasn't been doing well. There's a very obvious seller up here. I made a tweet about this as well. Very obvious seller out here at 110. So whoever this guy is needs to just get out of the way next time we get up there. And then if we break through 110, we can finally go. But until then, we've kind of been having this failed breakout on Bitcoin, where it's just trying to break to new highs and then failing, and then tries to break to new highs and failing. So it's really got to stick the landing. And that's why breakouts can be really fickle sometimes, because even if it does break, you would have had to suffer a 10% pullback here and then another 5-6% pullback here. So again, I want to wait for this one to stick the landing. I got involved a little bit up here and then got out really quickly the next day when this failure candle happened, and I'm going to look to get involved again if it moves higher, but I need to see that occur. If we look at these others, Ethereum, again, the same kind of story, tried to break out of this range, failed. We looked at Solana. It hasn't even gotten close to breaking out of that range. It's still now below the anchored view app from all-time highs, so some weakness there. And then I like to look at the Ethereum Bitcoin ratio for potential risk-on, risk-off scenarios. If people are buying Ethereum over Bitcoin, which would make this chart go up, then they're probably a little bit more risk-on when it comes to crypto. If they're buying Bitcoin over Ethereum, then probably a little bit more risk-off. And this is, again, just range-bound entirely. So that's kind of our walk around the market. Again, I'm going to not be watching the news at all this week. I'll be watching Bitcoin. I think that's one of the best ways to know. If you want to see if the world is ending, you can take a look at Bitcoin. If it's down a whole bunch, then probably bad things happens. If it's rallied, maybe there's some sort of resolution to what's going on. I'm not a geopolitical expert, and unlike a lot of people on the internet, I won't pretend to be a geopolitical expert. And then on Sunday, the futures open up and we can see what happened there. If you're nervous at all about what's going on, then it's absolutely fine. And there's nothing wrong with, going to cash and waiting it out and doing whatever. Myself, personally, I will be sticking to the systems and the algorithms. It's the beauty of being a systematic trader is I have a backtest for 25 years. So I've seen what my systems do under COVID. I see what my systems do under 2008, 2001, right, with 9/11, and then the year 2000 with the dot-com bubble burst. I know all that. I can go into the backtest and I can see these. And in the long run, they're blips. Sometimes they're very profitable blips. Sometimes they're negative blips. But in the long run, the systems carry forward. So if you don't have a system, these are the moments to really, really help with that. During the whole tariff tantrum, even though we went into drawdown, it was very easy for me to just kind of come in every day and do the work over and over and over again, knowing that I had seen these events before and I know what these events would mean to my equity curve going forward. So again, there's nothing wrong as a discretionary trader. Just say, hey, I'm going to go wait this out. I'm going to enjoy my June. When things resolve, I'll get back in, possibly leaving money on the table, possibly just avoiding volatility. There's nothing wrong with that. If you don't have any sort of systems or plans together, again, coming over to StatsEdge Trading, give us a try, and I will see you guys on Monday. Until then, probably more than most weeks, just get away from the screens.